Walmart, the retail giant, is making a bold move. The company is slashing prices. This strategy comes as the economy faces uncertainty. Tariffs and inflation are putting pressure on businesses. Walmart is betting that lower prices will attract shoppers. Walmart is known for its low prices. But this latest move is different. The company is cutting prices even deeper than usual. This is a sign that Walmart is serious about winning over budget-conscious consumers. The question is whether this strategy will pay off. Walmart's price cuts are already having an impact. Other retailers are being forced to follow suit. This price war is good news for consumers. They are seeing lower prices on a wide range of goods. However, it remains to be seen how this will affect the profitability of retailers. The success of Walmart's strategy will depend on several factors. These include the overall health of the economy and the response of competitors. If the economy weakens further, consumers may become even more price sensitive. This would benefit Walmart. The global economy is in a fragile state. Growth is slowing, inflation is high, consumers are feeling the pinch, their wallets are stretched, they are cutting back on spending. This is creating challenges for businesses. The economic uncertainty is causing businesses to be cautious. They are delaying investments. They are hesitant to hire new workers. This caution is contributing to the slowdown. It is a vicious cycle. Consumers are facing a triple whammy. Prices are rising. Wages are stagnant. Interest rates are increasing. This is making it harder for them to make ends meet. Many are dipping into their savings. The economic outlook is uncertain. Some experts believe a recession is looming. Others are more optimistic. They believe the economy will experience a soft landing. Only time will tell what the future holds. In this uncertain economic climate, consumers are becoming increasingly price sensitive. They are carefully watching their spending and looking for the best deals. This shift in consumer behavior is having a significant impact on businesses, particularly those in the retail and service sectors. Chipotle, the popular fast casual restaurant chain, recently felt the sting of price sensitivity. After implementing price hikes to offset rising costs, the company experienced its first decline in same-store sales since 2020. This decline highlights how even small price increases can deter consumers who are feeling the pinch of inflation. The airline industry is also grappling with the challenges of price-sensitive consumers. With airfares already at elevated levels due to rising fuel costs, airlines are finding it difficult to pass on further increases to passengers. As a result, major airlines like American, Delta, and Frontier have withdrawn their 2025 earnings guidance, citing economic unpredictability. The impact of price sensitivity is not limited to these industries. From restaurants to entertainment venues, businesses across sectors are feeling the pressure to keep prices in check. This pressure is forcing companies to find creative ways to manage costs and maintain profitability without alienating their customer base. Walmart, with its massive size and global reach, is in a unique position to navigate the choppy waters of economic uncertainty. The company is leveraging its considerable bargaining power to pressure suppliers to reduce prices. This strategy is aimed at keeping Walmart's shelves stocked with low-priced goods, even as inflation continues to bite. Reports indicate that Walmart is pushing its Chinese suppliers to cut prices by as much as 10%. This aggressive move is intended to offset the impact of tariffs on Chinese goods. While some suppliers have resisted Walmart's demands, the retail giant's sheer size gives it significant leverage in these negotiations. Walmart's ability to secure lower prices from suppliers is a testament to its market dominance. The company's vast network of stores and online platforms generates enormous sales volume. This volume gives Walmart significant clout when negotiating with suppliers who are eager to maintain access to such a large customer base. By squeezing its suppliers, Walmart is able to offer lower prices to consumers, which is crucial in the current economic climate. However, this strategy could have downstream consequences for suppliers who may be forced to accept lower profit margins or pass on costs to other buyers. Walmart's aggressive price-cutting strategy is sending ripples throughout the retail industry. As the dominant player in the market, Walmart's actions have a significant impact on competitors, both large and small. To remain competitive, other retailers may be forced to follow Walmart's lead, even if it means sacrificing profitability. For smaller retailers, Walmart's price cuts pose a significant challenge. These businesses lack the scale and leverage to negotiate lower prices from suppliers. As a result, they may struggle to match Walmart's prices without incurring losses. This could lead to store closures and job losses, particularly in the already struggling retail sector. The ripple effect of Walmart's strategy extends beyond the retail industry. As consumers become accustomed to lower prices at Walmart, they may be less willing to pay higher prices elsewhere. This could put pressure on businesses across sectors to keep prices in check, potentially impacting profit margins and investment decisions. The long-term consequences of Walmart's price war remain to be seen. While lower prices may provide a temporary boost to consumer spending, they could also lead to deflationary pressures and a slowdown in economic growth. The situation is complex and requires careful monitoring. Walmart's price-cutting strategy, while potentially beneficial for consumers in the short term, raises concerns about its impact on the labor market. To maintain profitability amidst shrinking margins, Walmart and other retailers may be forced to implement cost-cutting measures, often at the expense of workers. The retail sector is already known for its low wages and precarious employment conditions. Many retail workers earn minimum wage or slightly above, and their hours are often unpredictable. In a price-sensitive environment where profits are squeezed, retailers may resort to reducing staff hours, cutting benefits, or even laying off employees to stay afloat. The potential for job losses in the retail sector is particularly concerning given the current economic climate. With inflation eroding purchasing power and recession fears looming, unemployment is a major concern. Job losses in retail would further exacerbate the problem, potentially leading to a decline in consumer spending and a deeper economic downturn. Moreover, the pressure on wages in the retail sector could have broader implications for the labor market. As retailers cut costs and reduce wages, it could set a precedent for other industries, leading to wage stagnation and a decline in living standards for many workers. The global economy is navigating a complex and uncertain landscape. Inflation remains high, driven by supply chain disruptions and geopolitical tensions. Central banks are raising interest rates to combat inflation, risking slower economic growth and potential recession. The war in Ukraine disrupts global energy markets, raising oil and gas prices. This fuels inflation and weighs on economic activity, especially in Europe. The COVID-19 pandemic continues to pose risks to global supply chains. Consumer confidence is shaken, making consumers cautious about spending. This pullback in spending raises concerns about a potential recession. The economic outlook remains highly uncertain. Much depends on inflation, interest rate hikes, and the war in Ukraine. Businesses and policymakers are monitoring indicators, but the path forward is unclear. In this turbulent economic environment, businesses are facing a myriad of challenges. Inflation is eroding profit margins, supply chain disruptions are creating inventory headaches, and consumers are becoming more price-sensitive. To navigate this storm, businesses are adopting a range of strategies aimed at adapting to the new realities of the marketplace. One common strategy is to focus on cost optimization. Businesses are scrutinizing their expenses, looking for ways to reduce waste and improve efficiency. This may involve renegotiating contracts with suppliers, streamlining operations, or delaying non-essential investments. By reducing costs, businesses can protect their profit margins even as revenue growth slows. Another strategy is to prioritize innovation and agility. In times of rapid change, businesses that can adapt quickly to evolving market conditions are more likely to thrive. This may involve developing new products or services that meet emerging consumer needs, or finding creative ways to reach customers through digital channels. Finally, businesses are recognizing the importance of building resilience into their operations. This means diversifying supply chains to reduce reliance on any single source, strengthening relationships with key customers and suppliers, and building up cash reserves to weather economic shocks. The global economy is undergoing profound transformation. The COVID-19 pandemic, the war in Ukraine, and rising geopolitical tensions have exposed vulnerabilities and accelerated trends. A new economic landscape is taking shape, characterized by challenges and opportunities. One feature is the shift towards a multipolar world. U.S. economic dominance is fading as China, India, and the EU assert themselves. Technological advances in AI, automation, and digital tech are transforming industries. Addressing climate change and promoting sustainability will shape the new economy.